Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address.
You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Hello everybody and welcome back to the China Shop. Today we've got a special episode planned. I've got Dan joining me. This is a Friday evening. We're sitting back. We're excited to have a special roundtable that's been sort of planned.
Yes.
Featuring shop moderator Perdue and Vanta Trading's Baba Yaga as they nerd out on balance. How are you guys doing today?
Great. How you doing?
Yeah, getting a head start on a Friday.
I'm sorry. I'm still distracted by how messy Dan's desk is.
Oh, you're gonna call him out on air like that?
Yeah.
No,
it's the only space
Wow.
in the house that I don't have to keep immaculate. So it's almost like half protest, but half my desk is just naturally cluttered.
Dan, how's your car looking these days?
Okay, well, we won't. How are you doing, Kyle?
So two spaces. Just point out, there's more than one.
It's actually fairly clean because I have to drive places. I have to drive the wife around. Like she doesn't like to drive.
I remember that being a consequence.
Yeah, cleaning the car.
That turned into a habit.
Wow. I mean, hey, no hate from me, dude. No hate from me. You do you.
All right, Mike. You requested this sit down here. So tell me kind of what you're hoping to accomplish with this?
I like to go down the rabbit hole of looking at balance. Me and Bob have had little banters here and there in chat and would like to get his thoughts and opinions of what he considers balance and then kind of bounce it back to me and give my opinion of balance and kind of see where we fit in the middle.
Yeah, okay. Yeah, that sounds very interesting. Excited to listen in on this one. I'm not sure how much I'll be able to contribute because I've learned most of my stuff from you. So it would be a good review for me to make sure I still got all the key points correct. Before we jump into that, though, let's get some self-promotion stuff out of the way. So, Bob, I'll start with you. You got anything going on over at Vanta you want to mention?
Well, we are still doing our trader evaluations, and we actually, I guess we're almost caught up. We got way behind trying to get to everyone in a timely fashion, just because there was quite a few of them. And yeah, for anybody that doesn't know, it's a free evaluation we put together with the help of a lot of you guys that are on this call currently. And it's just an opportunity for a trader to slow down and get away from the pace of the charts and data and all of that, and really dive into how sure and steady is their process, and then how well they're applying that. And it's for a chance for myself and Banks as a outside third party to look at that and just give some perspective, which is always helpful. So we've been doing a lot of that. We did, I think, 3 of those today. Banks and I did. And it's
nice.
The coolest part of that, I'll just say, is most of the time when we get on a call, most of the time, every so often we get on a call with someone and they start telling us the things that have already changed in their trading before we ever meet with them about what we think. And that's the biggest win, and honestly the biggest encouragement, because the goal would be, to help people improve. And it's so funny how just answering 7 pages of questions can actually, in some ways, at least give you
Uh-huh.
some good direction. So that's what we've been cooking.
I know when I was doing mine, there was a couple there. I was like, well, I don't know the answer to this, so we'll definitely have to go figure that one out.
Yeah, I mean, so that's the biggest thing. We've been talking as well about. We've gotten some good feedback. Like having those talks gives us a chance to hear from traders. We've gotten some good feedback about some things that we could possibly do in the room maybe a little differently to help
Mhm.
folks out a little bit, and also cater like to a broader audience in some ways, like a broader audience of futures traders instead of being so narrow with like, I'm just like always on about the NQ, right? But like multiple people, Perdue included, have mentioned that, like, dude, not really everybody doesn't trade that. So Banks and I actually had a little conversation today about how to better structure our morning prep stuff,
Yeah.
to incorporate, a couple of other markets. Yeah, so that's pretty much it. And
All
then
right. Sounds like
chilling
it's a two-way learning street then. That's awesome.
always.
All right, Mike, what about you, man? What do you got going on?
I don't have anything going on. Just trying to make the
Bullshit.
trading and running the business at the same time.
No, we could promote your wife's book if you want.
Oh yes, my wife did write a book. She wrote it at the start of the year. Nothing Left But Ashes by Lauren Perdue on Amazon.
I got my copy next to me. It's the next book I got on my list to read. I'll make sure those links in the episode description. Dan, what about you, man? You got anything going on you want to tell the peoples about?
Yeah, I'm working on a new podcast called Half Cocked Tales. And
that's a good
yeah, thank you. I've already got some guerrilla marketing schemes cooked up. It's just gonna be a daily, probably about 30 minutes to an hour, kind of like a cocktail lounge radio show, like Dean Martin meets Isaac Asimov.
Oh, that should be fun.
Yeah, real jazzy and
right.
upbeat.
All right, keep us posted and make sure we link those things when you start releasing those episodes.
Yeah, sooner rather than later, I hope. I got a lot of work to do,
Yeah.
It's a lot of music to record.
Yeah, dailies. Yeah. All right, let's dive in then. Where do we want to start then? Let's start talking about some balance.
Baba, can you take it away with what your idea of balance is?
Yes. So I am completely unoriginal and not creative when it comes to value and balance. But I think there's some ways that. So it's funny you said like my perspective was more traditional, and I feel like I just made it up on the fly and called it good. So
do we all just feel like that?
Yeah.
oh, isn't that what that's what everybody's really doing? Let's be honest.
Yeah.
But really, I guess for me, the idea of balance would be if we have 2 days or more where, with regard to time, we spend 70% of our time, in a given area, and if the next day, so that same 70% of our time overlaps at all, then those 2 days get married together into one day. Differing from you, I will look at volume on a like a 20-day composite, as well as like a intraday as the volume profile builds. On my DOM, I have a vertical monitor over here, and so I have the volume profile from Globex on one side and the volume profile from RTH on the other side as they build out. So I will watch value from a volume standpoint through that lens, but day to day, I'm watching for where do we spend 70% of our time, and does that time overlap with the next day, and then are we dragging that value slightly higher, or are we dragging it slightly lower? And honestly, like I'm looking at like my outline of my notes for how to interpret balance. And there's obviously some nuance to it. Like I'll do that day to day. I also do that weekly. So I look at the bigger picture, like every week. Where did we spend 70% of our time? And I'll apply the same metric. If we have 2 weeks that we overlap, those 2 weeks of time get clustered together. Like I'll merge those two profiles, those two TPO profiles, and then and really it gives me like 5 to 8 levels to pay attention to. as a value as a balance area builds, or as we build one and leave it, there's basically 5 things that I'm looking at. So
Mm-hmm.
when you composite the days together, I'm looking at the high, the ultimate high of that whole thing, and the low. So balance area high and low from a TPO perspective. I'm looking at value area high and low from a time perspective, right? I'm looking for point of control for the distribution. So when I reference distribution, I mean balance area low to balance area high, the entire composite of, balance area low to
Mhm.
balance area high, the entire composite. And then kind of a place that I would say maybe picked up on a little bit of a nuanced application is as we approach balance area high or balance area low. Obviously, those two areas are key, right? Because not only are you potentially going to leave a current distribution and begin to seek to form another one somewhere. So the idea of us getting very one directional through or out of that comes into play. So looking for trend days, but not necessarily trend day up, right? Like we need to, and I would be curious to hear your thoughts about this. Like when we get to the top of a balance area, that day or the bottom, that day that's the likely day that we will abandon. Like that's the day that will become an island.
Mhm.
And this would be the other piece of my approach or whatever is if there's a day that happens and then the following day happens, between those 2 days, if there's not an overlap of the value areas from a TPO perspective, then once that second day closes, if it's not overlapping, the prior day becomes an island day, and that's pretty common. I think a lot of people have heard of that. And my interpretation of that is that the market abandoned that idea, right? That either progression higher or progression lower has been abandoned. And then on the third day, then we look to either retest and then fade, or we look for just a straight continuation move away from wherever that island day was. So, like for instance, today being the 13th, Friday the 13th, we didn't have an island day on Thursday until the close of today, but we did have like the makings of one by how we drug value to the top based on the prior 3 days, and we kind of closed at the low of value after testing the top of what had turned into the top of balance because it overlapped the prior day. I know this is very wordy, but I think you understand what I'm saying. And so, in light of that, like the idea of retesting that even today without it truly being an island day yet, you have to think forward, or I try to think forward, like the likelihood of sellers feeling like they've got something here, like the makings of abandoning that upper distribution is something that I'll be looking for. Or like now that we've fell out of balance from the prior 3 days, the way that I see it, 15,179.50 becomes pretty important. 79.50 up to about 15,199. That little upper edge of today's value and bottom of balance from the prior distribution, that area will kind of be key. And that's, I haven't looked at like hourly, 4 hour, or any of that stuff, but just looking at balance and value, because if we get back above that, then the idea to kind of leave Friday as an island and go back and trade into Thursday's range and possibly trade into Thursday's value, deeper into Thursday's value, or even into the point of control or retest the top of that balance kind of would be, depending on how the auction develops, what I'd look for. One of the things I also pay attention to is when we get to when we get to the top of a balance area, or as we're developing a balance area, like it becomes very important to me if value of that day that touches the top of balance, like if that value is all the way up there at the top, so we don't have excess to the upside,
Mhm.
then that's like something I just like I pay attention to that. So like Thursday, for instance, we slammed, the upper distribution was thick with time and volume. We left single prints behind, And then this morning we basically tested those single prints, and at the 60s or whatever, 65. And then I'm assuming there was the LV in there on a volume profile.
Yep.
And that was a make or break spot. When the bulls open, it's so funny. Like when the market postures bullish into something like that, it really does create those like make or break moments. So I try to pay attention to how single prints are left behind with regard to where value was in the bigger picture of balance and all that. So, but that's pretty much it. Like it gives me, 6 to 7 levels. And I'd rather trade back into an area like that we've already traded. And then you get really clean targets. The only thing I consider to snap into a trade without a setup is balance area high and low. Like I wouldn't snap in without a really clean setup to like value area high, value area low, or point of control, because to me, the market kind of digests those levels before we move away from them.
Uh-huh.
Whereas like balance area high or balance area low, the market is usually snappy around those areas.
Is that
generally
because
speaking.
those areas tend to? I mean, there's probably a lot of stops built up in those areas because I'm guessing those are probably building around like the actual extremes, right?
Yeah, I mean it's going to be a daily swing high.
Yeah,
So
exactly.
when you think through like from Banks's perspective on liquidity, like any daily swing high or daily swing low he's going to be looking for like a peak below that and fail,
Right.
like
Yeah.
pick up stops in the run. So those can be great snap entries. I think like 3 or 4 weeks ago, or maybe it's been longer than that. So we opened the week at the low of the prior week, peaked below it by like 10 points, and then we proceeded to unwind to the upside back into balance. Is similarly to how we're set up currently, honestly. Like that could be a real thing going into next week. But
Yeah, and that's exactly what I look for on the balance area high and lows. You want to get that reaction, that quick V of the chart, and that's the biggest reason why I pay attention to balance is just look for those reactions.
yeah, so prior week value area high and low or something I pay attention to. I ask myself questions like, are we, from a day-to-day perspective, we may be cruising along, but from a weekly standpoint, like, are we in a larger a sequence of overlapping weeks? And it really just gives me awareness, I would say.
Mm-hmm.
It's kind of like, you've been around for like some morning preps, and like I want to know where we are in context of value and balance, because that kind of informs what I'll be looking for from an hourly or 30-minute to 30-minute standpoint, and that's what I really mostly use it for. A couple of trade setups, mostly awareness.
That was the biggest concept that helped me a lot was with market context and starting thinking about balance and learning about balance, is that it gave me kind of like a football field.
Yes.
And my balance is my midline, just like in a football field. And then it's basically who's winning the game right now. Are we at the red line, on the bear side, or are we on the bull side?
I love that.
And that's always given me that context, especially when I have an established balance and we're above the midline and opening above the midline, and we're opening above the previous day's high. There's no short button anymore.
Yes.
Gives me that idea.
How far can you take that analogy? Like, is the last 10 yards the hardest to gain?
Oh yeah, for sure.
If the Bulls have already run up the score, is the
Kyle, you don't know what
do the sellers get some garbage time?
You don't know what team you're playing this week or this day. That's the problem. Some days that last 10 yards you just roll right over them.
So I'm gonna so when you are looking at a distribution, let's say like a 3-day, 5-day balance, whatever. If we are opening any given day, you're the distance, and I guess like the unfolded prior day's auction, but basically the distance to the midpoint of that balance is going to inform you on a general bias. Is that what you're saying?
Yes.
It's interesting. See, I don't think of it like that, but I'm writing notes.
So for me, your balance is off a TPO generically. Yep. And that's where I started was, Dalton's teachings and using TPO. And It was always a 3-day balance for me on a TPO, and I'd merge them when they had overlapping value. And then I also used to track the composite volume balance as well.
Uh-huh.
And that's what led me down the road that I'm on now, where I only track balance by volume.
How
So
much discrepancy do you see? But do you ever look at TPO to see how much discrepancy do you notice?
I've plotted them both, and there's a little bit, but they generally seem to line up fairly well. Like you'll have
they,
different VPOCs sometimes, I think, right? And
yeah,
Yeah, is it the nuance of the profile itself is probably much more informative to you as well.
exactly. That's what it felt like to me.
with the TPO, all you're getting is just a dot at, or a spot that's telling you that, hey, we traded here
Yep.
in a 30-minute period, but it's not telling you how much volume was traded in those 30-minute
No.
periods.
No, it doesn't tell you that.
It also helps you with Sierra, like when you draw the composite value over the balance area while you're trading and you have that composite right there, and all of a sudden you see one bar really pop up and you're looking at, say, 4-5 days of balance, and there's one day of volume that really sticks out. I found it much easier to see that as opposed to an intraday volume profile that was building.
So do you watch the profile from like your daily volume as it builds intraday? Are you watching that
Yes.
intraday? Okay, so
Yes.
that's another kind of, I will keep my TPO up on a third of my monitor for, especially off the open, for the first little bit. But once we've kind of established what's going on, I rarely, I'll reference it from time to time, but I don't actively watch it. I know what levels from that information, that I garnered at the open or before the open that I'll be paying attention to. But I actually don't I don't super watch it intraday, and I wonder if I'm leaving something on the table there.
Yeah, I don't watch TPO at all during RTH. It's only pre or post market.
Will you post a picture to me or in this group of what what you're looking at? You don't have it open?
No, sorry, don't.
Well, that's okay. Just pop it open and do it. I'm gonna post one. You probably see mine. I think the only other thing that I would say that I watch for, and you guys have probably been around enough for this to happen. If Globex value area high and RTH value area high or low of either is within 7 to 10 points of each other, that little value gap, and I think Perdue, we've talked about this briefly before.
Yes.
That's your pivot. I love it when they open that way. Even today, like, we didn't have one as clean, but we did between 15,265 and 15,277, right there at the bottom of the composites value and the bottom of, so the whole distributions value and then overnight value. So that little block for me was below that was no longs until we got to bottom of balance or lower. And really, I was looking for us to sweep some stuff lower, and I actually snagged a trade late day. But those little when the market sets up at the open with that little gap in value,
Mm-hmm.
I love to trade that as a directional, pivot, basically. I think we both somewhat do that.
It gives you something to put your back to.
Yes.
Like
Yep.
this is my absolute line in the sand that
Yep.
if this breaks, it's all falling apart.
Yeah. So basically you're just no candles. Oh no, you do have some candles. What is that like?
Yeah, that's my Delta bar candles.
Okay, cool. And so you're just looking. So you're strictly looking at the volume as it builds, and then you overlap them when there's 3 days. Is that right?
Yes, so 3 days of overlapping value has to be created. So right now, for me, ES is in balance. And you can see the little box that I drew right there. That's where it broke out of balance, then created 3 days of balance. Even though it overlapped into a previous balance area, that created support. And now we're getting sucked back into a previous balance.
Yeah. So, yes. I love that. This has been a point of contention for me as I've wild wested my way around balance and value. So, at what point do you not regard what is to the left. What makes you not regard what's to the left anymore? Like you have that red box. Talk about that.
Well, so the only way that I can get rid of balance area levels, which would be the balance area high, the midline, and the balance area low, the only reason I will get rid of those levels if another balance area is created that overlaps them.
Yep. Okay. Same. Like we came to that conclusion independent of one another.
Wow.
But yeah, so it's like the developing auction overrides once it overlaps, it also overrides in importance, and that's true for any of the things I look at for directional clarity or bias. Like the most immediate information is the most valuable.
It is really funny how all of this is kind of just pieced together by miscellaneous teachings, figuring out, and like sometimes, like some people get so upset, like I made this. And I'm not saying I made this. I'm not saying you made this. I'm just saying this is how I see it now. And I guarantee you, I read it from a bazillion different places on YouTube and everything else.
Yep. So then for you, now we've worked our way back in on, and I'm looking at NQ, but ES, I can see it on your chart as well. We've worked back into a prior balance area now. It was like 5 days of balance.
Yeah, there was actually, this one's actually better to see. Let me show you the simple trading view one that I post a lot of time in Discord, where it shows where we came from and where we're now at. So you can see we have multiple days of balance.
Look at this. Look.
What's that?
No, look. It's just, I mean, great minds, I guess. Look at this.
Oh, wow. Wow. So those listening,
we have never shared.
Yeah.
We have never shared these images.
they have both shared their charts and they've boxed out the same exact areas.
Oh, I'll put these images in the episode description.
You know, and
We're closer than we thought.
Yeah, we really are. I love the so then tell me this, dude. What made you, so when you have an island day, you don't include that in your balance area?
Yeah, if as soon as balance is broken, which means as soon as value is broken, it's like that big box I showed you there is actually 3 different balances that I've all overridden. I just quickly drove the box, but for me, I have to have continuous value of volume overlapping the whole entire time.
Okay, so if you look at the chart that I posted, so we have day in the blue box, we have day 1 overlaps day 2, overlaps day 3. Day 4 is originally looks like an escape of balance area high, but then the value still overlaps, so it's just an extension up of the auction. Nothing really to note there. And then the 4th day, the 5th day happens, and then when the 6th day happens, that's when the values didn't overlap. So that 1, 2, 3. So that 5th day, you would not include that day in your balance area, correct?
No, I would not. But that is interesting because your value is a little bit different than mine. I'll use this here. Mine's trading view right here.
Well, are those on that new balance area at the higher one, the smaller one? Are those combined? Because that looks like a much fatter TPO chart.
Yeah, the one up top is 3 days combined.
Okay.
And then I expanded the one at the bottom. It was 5 days smushed together. So the question I've most recently asked is where do you measure? Do you measure your, not you, but like where do I when we break from balance, the day that becomes the island, should that day be included in the balance or not included in the balance? Traditionally, I wasn't including it, and then as of the last 6 months or 4 months, I have been including it. But I actually love the gap that's created. Yes, I love the gap that's created there because it really drives you to anticipate breaking from this will most likely draw us to that. And whereas I was looking for that, for us to catch some type of bid as we came down into the single prints that were there and into that island days value. But man, I really like the separation of zones that creates when you don't include those, and that day just really stands out.
So if you look at the one I just posted, which is on the 25th and the 27th, I have 2 days that are not in a box because they're not 3 days of overlapping value. And then then we jumped up and went to value, or we jumped up to the midline, and then we created a value up there. And we held that area, keeping those two separated. Actually, we did have overlapping value. I just noticed my drawing's bad.
Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address.
No, but I get the idea though.
That's that's the whole idea of it is just that.
And also, when you draw your zones, you're not drawing them to the low of the day. Your value zones, you're really capturing just the value, and that's the distinction in your work. So you would rarely anticipate a reentry into a balance area being defined by not just crossing over the high of the day at the end of that, but crossing back into the value, or like in the picture from today, touching into it and then leaving back out of it.
Yeah.
So you're looking for it to move deeper into that distribution, just based off the nature of how your work is organized. I like that.
The magnetics, it's the magnetics of LVN HVNs.
Yeah, for sure. They're the breadcrumbs left behind by all this, right?
Yeah, the HVNs want to attract price back to it, and the LVNs want to repel it. And if we get acceptance into an LVN, which is normally outside of balance, that means we're going to go seek balance somewhere else.
Right.
And a lot of times, previous balance is going to be the target because price has memory and all that jazz.
Yeah.
So that's basically the auction market theory. Is so we just went up. If you see, actually, post the whole entire chart where we went on this is NQ. We went to a previous balance area, got just above the 50% midline, and rejected it.
Yep. I've got a line on my chart right up there. I don't know what I have it drawn off of, but I had a line up in that area as well. Man, you're going to make me have to rethink how I'm doing some of this, to be honest.
I want to ask you guys a couple questions. Like, Baba, where did you learn like all this stuff to incorporate your ideas? Where'd you learn the bulk of that information? And then I'd ask Perdue the same question.
Well, I mean, I messed around with I was always a volume profile person.
Mm-hmm.
But you take an idea and you kind of observe it over a period of time, and then you begin to try to extract. Like, I always ask myself the question when I'm trying to find a new way to approach something, like, where do I wish I would have been taking a trade? And then after I ask myself that, I find a few places on the chart. I'm like, man, I wish I knew something there. And then I try to find what is repetitively apparent in those areas.
Mm-hmm.
I watched a lot of videos. I mean, I had a lot of conversations with people, like mutual friends that are big into volume, especially, probably 3 years ago or something like that, in the volume world. But and then I kind of moved away from volume because the way I was applying it, I was applying volume from a initiate a trade.
Mm-hmm.
So as if it were a trigger to pull the button and actually put risk on. And like I said, I really was using it as a entry methodology instead of a contextualization tool. And so I got kind of pissed off at volume because of my misapplication of that. When I started messing around with TPO, it's a little bulkier, like it's a little it's a little less precise, as Perdue would probably agree.
Mhm.
But for me, that pulled me out of the mindset of like, when we touch this line, I need to be doing something. And so
So
that's
yeah,
that's why I went that way. And then I watched a
yeah.
lot of Jim Dalton stuff. I watched a lot of people's videos about how people trade TPO, and like what I don't do is I don't do this the quote unquote like a right way. Like the right way, you're watching for like initial balance, blah blah
Mhm.
blah blah blah. Which side do we break? Blah blah blah. Like, and there are market profilers I respect a lot. One of them is the Pirate Traders. The guy from Pirate Traders is a Jim Dalton guy, and like he trades this way, not this way, but he trades like the appropriate way to apply Jim Dalton's stuff. So yeah, it just started from looking back at it and kind of noticing how we move, how the market seems to move, and then yeah, just like piecemealing it together, probably like everybody else.
Yeah, just if there's someone who wants to get a better feel for kind of like how you see the markets, is there like any sort of resources you'd point them towards if they wanted to try to
I
like start down that path?
I mean, I first got started obviously with Dalton's books. I mean,
Mhm.
that's I think where everyone should get started, even though the
Yeah.
books are very dry to me.
Yeah.
Um, my
is
favorite
that?
resource that got me into it was Shadow Trader, Peter Resnicek.
Yes, yeah, I've watched a lot of his stuff as well. Funny.
He used to have a super cheap service. I don't know if he still has it now. He used to have a daily a pre-market perspective, and it basically showed the basic idea of TPO and how to interpret the TPO from the previous day into the week and so forth. And that's what got me on the rabbit hole of Sierra charts and merging TPOs together. And that's what then eventually somewhere down the road I kind of just fell off the TPO part and just went to volume.
So we crossed like ships in the night, brother.
Yeah.
It sounds like it.
But
It's funny, Baba, but well, for me, the same thing that you just said about why you didn't like volume profile is the same thing problem I had, I think, with TPO, where I was trying to use it for like generating trade ideas, and that's not the right application.
well, I'd say some people can apply it that way, but it's not dynamic enough for me. My way of I just can't apply it. We just posted a couple links if you want to put
Perfect.
those.
Yeah.
And I'm not really friends with. I wish I knew this guy. I should probably reach out to him and like have a conversation.
Let's set it up.
Because he runs a service. I mean, it's like $5 a month.
Mhm.
And it's called the Brigade, and it's like a TPO. I don't really know what they do because I've never been a part of it, but I've watched a lot of his videos, and he live streams from time to time. And I just remember the thing I appreciated about the way that he approached it is he was never in a hurry to do anything.
Mm-hmm.
And I just admired that his ability to allow the market to develop and season itself in a day was like I admired that and wanted to maybe have the level of confidence in the way that I was approaching things to be okay with allowing the noise to play out and then finding what really stood out to me that I could take advantage of instead of just jumping on the first thing that showed up. Like his patience in the way he views things, I just appreciated it. So I did pick up lots of little nuggets from watching their stuff or his stuff. So I'd recommend, like, if someone wants to learn, that's a great place. Shadow Trader as well. Like I have, he's some videos out here and there. I've heard him talk about some stuff to do with balance. He's sharp. I mean, there's so many great resources out there. I think the hard thing is sifting through the trash to find the treasures, right?
It's always the hard thing.
and how many different rooms we've all been in and how many different things we've looked at. It's sometimes hard to piece together where it all came from. But to me, Shadow Trader was the most influential as far as going down that rabbit hole.
Also, Perdue, I think you posted some stuff in our room too, explaining how you look at balance.
Yeah, I posted some stuff that it's basically my personal journal and notion about how I look at balance, and then just basics of auction market theory. And that's really balance to me is not the trade where I'm going to pull the trigger on a trade. It's just giving me where I should be looking and what type of information I'm looking for.
Mm-hmm.
I'm actually not a very good order flow trader. I am very much so a candlestick trader, and I just look for certain patterns and certain reactions around those levels.
Well, it contextualizes all that information for you.
Yeah.
And that's the same way I use it. And I really think that probably for most people that is the distinguishing factor between how you're going to apply any information is going to distinguish whether it's beneficial for you or not, which sounds like overly simplistic, but like I love the way you just put that, dude, because it really does contextualize the theory of auction market. And whenever like if I meet with someone, like there's some local traders, which has been super cool. People in our room that live local to where I live geographically, I'm able to like go meet with them, like grab coffee and talk about trading. And it's so cool. And if someone's really new, the first way that I explain the market to them is around the idea of attending an auction.
Mm-hmm.
Mm-hmm.
And because to me that really sure
That is
it's
the
not,
purest form. Yeah.
it's not actionable. Like they're not going to go home the next day and trade using that information, but the way that they process what they're seeing in front of them on the screen will help them be looking for a value. I can't remember who said this. I was watching a video, listening to a podcast or something, and someone said that we look for a value in everything we do in life except for when we approach the markets.
Mm-hmm.
So we're lured into participating like we're giving our money away in areas that are for the masses, quote unquote. And they compared it to like purchasing a vehicle. And like if you don't just go to like the first place that has the vehicle you want and then pay the price they're asking and then go home and feel great about it. Everyone like shops that around. Like no matter how much money you have, like you're going to shop around and find the best deal on the car.
Damn, I love that thought.
Yeah,
Right.
and so
Yeah.
if you think, like the way I explained trading to a guy actually like just a few weeks ago was imagine you were at an auction where the supply that was being auctioned off, pick an item. I actually used pine cones because we were standing outside and there was pine cones on the ground. And I just said, like, imagine I have this massive supply of pine cones and I'm selling them to the public and I'm auctioning them off. And as I auction them, people are buying a lot of them at the price I'm selling. So naturally, a good auctioneer would raise the price.
Mm-hmm.
And then if people continue to buy, I would continue to raise the price. And then at some point, I'm going to raise the price so much that people are not interested to buy anymore. And when people aren't buying anymore, a good auctioneer begins to wind the price down. And so I was just like, so imagine like, where would you want to be buying the pine cones? Like, do you want to pay the top dollar for the pine cones for the session of auction that you've participated in? Or do you want to either A, buy them at a value, or B, sell them at a premium? Or if you notice that the market is crashing because no one's buying anything, do you want to go ahead and begin to be on the offer side, offering your pine cones and trying to offload them on the way, right? As price goes down. And he just looked at me as like, that's how you think about the stock market? And I was like, dude, 100%.
I've always had the visualization because I used to go to a lot of 4-H auctions and stuff like that. I still have that the auctioneer when things were hot, he'd be fast and moving, and I always have that that bidding sound on the auctioneer. I'm 100, he's moving real fast. Every time I look at the DOM, I swear I feel like that's what I hear, like that he's just talking faster or he's talking slow.
That's what I'm going to be visualizing now.
Yeah. Well,
they do that. They do that by design too to get your emotions going.
100%. And I think that's that clarity of that this is a competitive environment where people or robots or and algorithmic traders and everyone else, they are looking to buy at a value, sell at a premium, and they're looking to prey on the people who have an impulsive nature. Because when you can't control that finger off that mouse button or your hotkey or whatever, you'll get lured into being one of the sheep, like led to slaughter. Buying things where you shouldn't buy them, selling them where you shouldn't sell them.
Must be Perdue's auction we're talking about.
No, I will say I don't want to give off the vibes that Whenever we go up, you should just automatically be looking to sell, and whenever we go down, you should
No, no,
automatically be
no, no.
looking to
We all
buy,
know
right?
that, but
It's all contextualized against the larger auction. And the fortunate thing about the style of work we're talking about, the kind of homework piece of like contextualizing the current auction or the current series of days of auction, is it informs you where value is, where can you get it, where's premium, and then how can you take and you distill that down to some areas where you feel good about paying the price that's being asked. Now,
Mm-hmm.
how many times have you guys sat in the room where well, I mean, I don't know, where I'm just, we're not taking any trades.
I want it higher. I want it lower.
Exactly. And how many
Yep.
times do I not get it?
Yeah.
Yeah.
So many times I don't get it. And the market goes the direction I anticipated it was going to go, but they didn't meet the
wasn't va-
demands that
yeah.
I had. And I
You
think
didn't find the value there.
the more you grow into being able to not take trades because of the work that you're doing, the better the trades are going to be that you do take. And like that's like when you kind of moving to like another level of functioning. When you're not going to the market looking to get into something, you're going to the market wondering like, are they gonna meet my demands today? Like, are they gonna give me what I want?
All right.
And if they don't give me what I want, man, I'll just sit on my hands.
I was speaking to another trader just about that exact thing today, about trading less. How many times we hear it through our, green years as trading, about trading less and just trading better quality, not quantity. And because someone was asking me about, what was my turning point, and that's really been more and more. I've been noticing that more than anything is that it really is the market in general as balance, and then trading less and being really picky about where I trade. If I'm trading in the middle of balance on opening range in the middle of the previous day, I don't want to do anything this morning. I'm just gonna watch that.
Perdue, I swear you must have listened to today's recording. That's so very familiar. I think they're saying very similar things today.
Well, can I ask a couple more questions of Perdue for the last few minutes?
Yeah, go ahead. Yep.
All right. So, let's see. So, do you look to days like an island day, right? That day that was the day prior to the gap up or the move up where balance doesn't overlap. Do you look to that day as especially supportive or especially resistant, or do you just kind of incorporate its value and it's just another day?
To me, an island day, I think, is my interpretation of Flurry's island day, is where value from the previous day doesn't touch the previous value.
Correct. Yeah.
Okay, so that's exactly what I think of it. So if we open up and we're outside and away from the previous day's value, leaving it as an island day, I basically pay attention to that gap. And then actually what I do is I draw a fib level from the previous day's close to the previous or to the new day's open.
Open, looking for that 50% hold.
Exactly.
Yeah.
And as long as it holds that 50%, like the football field, if we open below it and the Bulls can't get above it, guess what? I should be looking for shorts.
Yes. Okay. Same thing.
I gotta make a notes here.
Okay. Here's another question. So this is an idea that originated with some work that I was kind of like trying to soak up from the OR trader, the pit trader, OR trader. He's friends with Rye Harris. Yes, Pax. I could remember Rye Harris, but I couldn't remember Pax. That's like Rye Harris was like his mentor or whatever.
Mm-hmm. Yeah.
So one of the things that was a good turning point for me was thinking of the market like something that was expanding out as the day develops. So I know that might sound weird, but traditionally I had gotten caught in. So when I was able to started making good levels, and a lot of my ability to create levels actually originally derived from a lot of work that we did with a team of guys in the options world. I got into this perspective, like when the market opens, I want us to, if we go up to this level, I'm going to get short, or if we go down to this level, I'm going to get long. And unless those levels are absolutely like bangers, that is a great way to just get yourself beat up. So I started to use some of Pax's, just the way he thinks about the market, to trade from where we are out to the next thing of consequence. And the only hiccup to that, or the only, like, what you consider to be a level of consequence, obviously informs you of how much room you have from wherever we're opening, how much meat is on the bone for that trade. And that's something that I try to stay real mindful of. Like, it used to be 50 points. I needed a 50-point runway. At one point, I needed a 100-point runway. You can imagine how hard it was to get into trades where you felt like you had a 100-point runway on every one of them. But I've reeled that in since. When you're trading this, like today, for instance, is there, and I know your trade setups are obviously different than what I'm doing, but with this information, as we fell below your little blue box, two questions. Were you looking for the bottom of that to possibly hold? And then if not, is your trading ability, are you dynamic enough to then flip and just find a short setup down there to take that move? Or, like, how do you, I guess, like, does that make sense? Like, it's like a pretty crappy question, but are you trading out to these things more often than not, or do you find yourself sitting back waiting for them to hit and then try to, say, fade back in, or
Um,
or vice versa?
yeah, I'm always very well. I try to be flexible
Yeah,
all the time. This morning I was actually quite bullish to where we were opening,
yeah, they
and
ran it up, and
yeah,
yeah,
they ran it up, but today wasn't a very good example because I had a whole bunch of PC issues from moving my PC last night. So I missed the open, but I had drawn it on my chart before I had realized I didn't have audio and all these things going on. But this morning I pay attention a lot to the 4-hour candle into the open,
yep, super aware of that. Yep.
and so I will share this chart here. It's an example of ES, but originally my notes had written on there said I am bullish above the 4-hour on this horizontal line because that was the previous 4-hour high that we need to close above. If we close below that, I got to be thinking it might be a two-way trade or look for the bottom of balance.
Right.
And the previous day mid, which was yesterday's 50% line, was right there. You can see how we popped up above it. We hit the midline of balance, and then we then conceded and dropped right through balance area low into another balance area high. That is like the hardest part in trading.
Oh yeah.
To open bullish and think you're looking for a bullish trade and let's get on this and just rip it, and then to flip it and go short.
Yeah.
Yeah, well, and so so that was my dilemma today, which I think you were having computer issues, so you weren't in for pre-market work. But like, I know Kyle, I think you were there possibly.
Yeah, I was there. Yeah.
Banks talked a little bit. I think I posted a picture or something, but I was looking at that 33 15 3 17 on NQ was yesterday's value area low. And my concern was, with where we opened, if we don't make a value journey. So for me, it wasn't just it was, we have to like, the bulls have to trade through 15,383 and find acceptance and continuation, or they're in danger of at least trading 15,383 to 15,317, and then 317 gave birth to 15,265, which is the bottom of value for the distribution that we were in. And I had a little yellow box drawn down there between 265 and that 274 roughly, which was the bottom of overnight value.
Mhm.
And it was like, if we don't hold that, we're going for balance area low. But I found myself, because of the nature of the markets, and it was a Friday and I'd already had a good week, I was like, I just couldn't flip. I didn't do anything. I didn't flip short at 265. We had an area at like 230. I was like, okay, if we can trade back up to like 230, here's the setup. I drew it up and put it in chat. Like, this is what I'll be looking for. We front ran that by like 12 points or something. I didn't want to accept that much more risk, so I passed on the trade. I guess it's just good to hear that, like, that is still a very difficult. Just because we have all of this information, there's still a gap between what we know and how well we can apply it. And that's the encouraging thing to me, is that there's still room for improvement, because I had, some great levels today that gave the directional activity I was looking for. But because of the violent nature of which we recovered without trading through overnight low, I think we like literally double bottomed there. It did put me on guard for that same look. And so I was having to be real careful because you know how NQ likes to be. And then Friday, especially, like it's definitely a day for manipulation and craziness with all that. And so it was hard for me to get positioned for the short as well, even though I had even some setups that were there. We just needed to trade back and reoffer them, and we didn't do that. So yeah, it is hard, man. Like having this information is so helpful for clarity, but there's still a challenge to like applying it and really making it all that it could be. Which I think you probably would echo the sentiment of like that's the work
name
that
of the
we're
game.
all that's what we're working on.
That's the hardest game right there, is being able to flip. And it comes back to that TPO teaching, whether it came from Shadow Trader or Dalton. It's just that the 30-minute window, every single candle. I always try. I actually used to have a timer on my watch that would go off every 30 minutes, and just as a reminder to tell me what is the market doing good, what is it doing bad, what is it trying to do, and just kind of give you that mindset to just kind of check, pull the screens out, back up, and go look at what's it doing. And then that's actually a good time for me to look at other charts. Like if I looked at NQ and it didn't make a new low, but ES did, and YM didn't make a new low, but only ES did. So what's going on here? I need to watch this.
Yeah, that's Bank's 30-minute rolling profile.
Mm-hmm.
He has a 30-minute volume profile chart that just rolls the profile from every 30 minutes sequentially. Is its own volume profile.
That's good, yeah.
Nice.
And that's a pretty cool way. And we could go on forever, but I know that we're up against the clock. So
Yeah, Dan already had to jump off. I think he had engagement.
yeah.
Does anybody else have anything they want to say then before we wrap this up?
I appreciate you guys' time. I always wanted to have this talk, and it's actually amazing that we're actually closer than I ever thought we were.
I did not expect that.
Yeah, and you know what? Like I feel like I have the Bush League approach, and now I have like 20 more questions that I'm going to have for you, Perdue, like over the next week or so, because there's some ideas and nuance to how you're applying this that I'm going to play around with for sure. There's I think what you have worked out is compelling. Like it's super solid, and especially that 50% battlefield thing, like that's really cool. And I'm interested to play around some more with that.
Yeah,
we can continue that on in Vanta.
Yes, we can.
I love the some of the just tips and ideas that you guys have brought up today. The big one for me is thinking of being at the auction. Like, don't let my emotions start to dictate my actions, and that's exactly what an auction is designed to do. Like maybe just being aware of that will help kind of snap me out of that and start looking for deals, which is what I'm really good at.
Yeah, like make them jump through your hoop, like that's exactly the best thing I could say is like make it jump through your hoop. And then if it does, pull the trigger.
Even if it goes against me, hey, fuck you, I got my deal.
Yeah, exactly. I mean,
at least I can take that as a win.
Wouldn't you? And and then you could celebrate that even if it was a loss, because the win is the process.
Yes.
Trade on your terms, not the markets.
Dude, like come on. That's a quote. I'm going to get that tattooed on my chest.
All right, guys, we're going to have to wrap this thing up then, I think, because, pretty sure we could go on for another 2 or 3 hours if we really wanted to. Thanks, Baba, for stopping by from Vanta. Make sure you check them out. We'll have links for their stuff in the episode description. Check out Half Cocktails coming out soon. Check out the Nothing Left But Ashes. We'll have all those links in the episode description. But till then, tell your friends, hit that like button, all that other bullshit that I hate talking about, and have a good night.
Thanks, dude.
Thank you.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.